right. Hey, welcome and thank you for tuning in to yet another episode of You Didn't Get the Memo show. We got a great show for you. Look, my guest is just dope. He's exciting. He's inspirational. He's informational. And so I am just so excited to have him on. But again, I want to greet you all. Thank you for tuning in. And I'm Gloria Bailey Ray, your host. For those of you that are new to watching the show, listen, I just want to remind you that You Didn't Get the Memo is about providing you, the viewer, with relevant, factual, mainstream information to help you be informed and to make informed decisions. Now, if you have questions, this is a very interactive show. So you can place your questions in the comments and we will do our very, very best to get to you and respond to you. All right. But let me just level set for a minute because we're going to be talking about disrupting generational poverty. And if you were to think about what generational poverty is defined at, it's a family that has lived in poverty for at least two generations. And, you know, people may say, well, that's just how it was. Well, listen, what can cause generational poverty? Events causing generational poverty, it occurs in families that are, when we think about it, that are not equipped with the tools to move out of their situation. How do you break that cycle of poverty? You're going to hear my guests talk about this. The thing is educating yourself. This comes first, the most important. Changing your mindset towards money, leveraging community resources, avoid predatory payday lending. Look, and then you got to ask somebody that you trust. Focus on your credit. These are things that for some of us that were raised in certain areas and our parents didn't have that knowledge, our grandparents. But look, this day and age, it's about educating, and that's what we do here on You Didn't Get the Memo show. Just think about this, that at age 65, Americans are starting transitioning to retirement. Those who've not saved enough money, not enrolled in a pension plan or 401k plan, you're at a particularly higher risk of having to continue to work long into your old age just to stay out of poverty. And that right there should just have everyone's bell tone hearing dialed up. Education is the best way to help ensure financial security in the United States. And American adults who've not completed high school are at an especially high risk of living in poverty. More than one in every four of the 22 million adults aged 25 and over who dropped out of high school live below the poverty line. Now, I want to introduce to you my guest, Mr. Jasper Smith, who's a certified retirement counselor. Jasper, thank you so much for joining us. I am excited to have you on the show, and we're going to be talking about disrupting generational poverty. So I'm going to start with, first of all, asking you, as I do all my guests, just give our viewers a little bit of your backstory. Tell us about who Jasper Smith is and how you came to get into this financial industry piece.
I'm just one brother trying to make a difference in this world. That's it. Nothing crazy. Just disrupting generational poverty with everything that I do. And I am the youngest of three, born and raised in Durham, North Carolina. And I've actually lived out here in the Bay Area almost 13 years now. So I'm still a Southerner at heart. And the Southern boy in me is alive and well. And I am a product of an HBCU. And I'm sure somebody may have some issues with this next statement, but North Carolina A&T is the best HBCU in the world. And attending an HBCU really helped to focus, like how I'll say not focus. It gave me a perspective, I'll say, on how the world has treated Black people, how it's looked at Black people. And I think attending an HBCU was one of the best decisions of my life, because when I left school, and I'll be honest, I didn't know what I wanted to do upon graduating from college. So for me, it was, I just want to get a job and make money. And that's what our system pretty much is designed to do for the most part, right? We go to school, we get educated, we get a job. And so I was no different. Wanted to get a job out of school. I was able to do so. And I jumped right into the financial services industry right out of college. So I'm 21 years old and I just, bright eyed and ready to go see the world and learn something. And this money thing kept like eating at me. It was like, hey, the money makes the world go round. But when I'm looking around and talking to people, I'm just not seeing us understand money. Like, I know we see it on TV, you see it in the movies, social media nowadays, but I was having conversations and I was thinking to myself, why don't a lot more people who look like me even pursue these careers? That was the first piece. And then the second one was just listen to the conversation my family and friends were having coming up. We didn't really talk about like riches and wealth. So that was the critical piece for me. And then just getting like, again, fresh out of college and getting into the industry and seeing the real, like I learned the game off gate. And so I think a lot of people don't get that exposure. So I'm grateful to have gotten that job and really started to see the game. It's a game. And you need to know the rules, understand the rules, and use the rules to your advantage. And I was obsessed with, I don't think people who look like me know these rules.
Right. Well, and if you think about it, though, you said something that was really important. A lot of families, what they tell you, go to school. They knew enough to go to school, get an education, and get a good job. And once you're on the job, you stay on the job. But I say that job is golden handcuffs because you know what? Long gone are the days of you getting that gold watch and this huge retirement package. It just doesn't happen. But they gave us what they felt they knew. But at the same time, one of the things that I want to show to our viewers is, this particular screen, because it brings us into what you're going to talk about. And you know what?
Everybody ain't ready. Miss Gloria, you better stop. Everybody ain't ready for this life. And I don't try to, I think early in my career, I wasn't this, I will say, I wasn't as confident in my message. It was, I'm trying to help. I want to be nice. I'm a Southern guy and I care. Like I have a big heart, but I realized I was caring more about somebody's situation more than they did. And it was the toughest thing for me to pull myself out and just start, let me just ask a question. And based on your response, I can move on knowing that you're not ready and the time isn't right. And I got to respect that. But I've gotten better. I'll say that. I've gotten better.
Yeah. Well, one of the things that it's okay to be a bleeding heart to a certain point, right? But there comes a point in time where you're on a mission and your mission is to disrupt generational poverty because like you said, you understand people don't know what the game, not everybody, we're not painting all of you guys with that same brush, but we know that there's a vast majority of you that don't understand. And when we talk about generational poverty, which is one of the things I actually saw a post, Jasper, that you did, and it seemed like every time somebody dies, there is a request for a GoFundMe. And that was also the impetus that got me into this. So I'm going to first of all ask you this question. What are the areas that people tend to overlook when it comes to making financial decisions?
You said a key word in your introduction. They don't understand themselves, meaning they don't have the right mindset, which you mentioned. And then I also made a note as you were speaking, people don't understand their money personality. And I wrote an article about this on my website. I think it's called Money Personalities. Just understand who you are. That's it. Like we all got issues, myself included, but it's almost like we're fighting ourselves internally, and we can't get out of our own way. I think that's the biggest struggle for most people. It isn't these products and solutions. It isn't, I don't have like this magic wand. It's, you got to be ready and be willing to make that decision. And it's just a decision. It's not right or wrong. It's not good or bad. There are consequences no matter what decision you make. So I hate when people say, well, that's not a good idea. Well, to you, it might have been. I'm not going to judge you. And I think we're so accustomed to being judged, and we're embarrassed, and we're fearful. And at some point, you've got to get past that. That is the piece that I try to work with my clients, or even during workshops or any kind of talk that I'm giving. It's just, what is it that you can control? And are you doing the proper things that are in your best interest? And when I ask a tough question to somebody and they freeze up, or they get a little offended, or you get in your feelings, that just means there's an opportunity for you to grow.
Mhm.
That's it.
I agree with you because, one of the things in me reading your book, what stuck out to me was people are more willing to talk about their sex lives than they are about money. I'm just being real. Like I
Yeah.
said, you are this exciting, gentleman who I know, and you've been doing this a long time. But people will answer a question about their sex lives, or who they're sleeping with, or
Yep.
what they're doing, or what they're into, before they will talk about, what their money. Talk
Yeah.
about your paycheck. Talk about
Yeah.
what percentage of their paycheck is going into a savings, what percentage of their paycheck are they putting in their retirement account. I mean, all of those things. And again, I love you. That's why I said we're level setting. It's not
Yeah.
about you upsetting somebody's apple cart, because their decision is their decision. But what we're talking about is giving them information so that they can be better informed and make informed decisions when it comes to that entire piece of when we talk about financial planning.
Absolutely. And you said a key thing too. Education is critical,
Mm-hmm.
but we got to apply the stuff we're learning. I don't think we're at an educational deficiency in 2021.
Mm-hmm.
I mean, most, I'll supply everybody I know or that I see walking the streets has a smartphone. And I always it begs the question of, what are you doing on that phone? Are you just being social? Are you just looking up sports, looking at the weather? But are we really educating ourselves around things that are going to help us move our agenda forward, to help us achieve our goals? Or are we just out here having fun? And I'm all for having fun. Don't get it twisted. I love acting a fool like the next person, but I don't let having fun and enjoying life jeopardize my long-term financial future. That's the difference. It's just some people just won't make the decision to curb some of the fun, or make
Mm-hmm.
those adult decisions, those tough decisions, because it's temporary. But we think it's a death sentence if I cut out spending money on my favorite cup of coffee. No, I just said stop for like 2 months while you get your other stuff in order, and then go back. So because everybody's got a vice. It's
Right.
always like, what do you spend your money on? Great. I'm not going to stop you. But all I can do is try to persuade you to, can you look at it from this lens?
Right.
You said
Right.
you want to go here, but you way over here.
Right. And the reality of it is, let's just use Starbucks, for example.
Yep.
I know people that go to Starbucks 2 to 3 times a day.
Yep.
Morning, at noon, and in the evening drive home. And they're spending on average, let's just say $6.50,
Yeah.
per whatever their vice is when they're
Mm-hmm.
getting coffee. If you just add up that alone, and instead of doing 3 Starbucks, doing 2 Starbucks, but it's a way to think about that. So that's the question. We have a question here. The question is, how do you get the message across to children when they don't realize that they are in poverty, especially when they get everything that they want?
Oh, that's so good. So a little dose of reality is what I always tell anybody. Just whatever the children can relate to, that's exactly the example you should give. And it's usually, most children and even adults have some, I'll say, famous person or a favorite TV show. And you have to be able to make that connection on their level, first off, to get the message across around, we don't have it that good. But here's a life that you're watching or witnessing. Here's what it takes to get to that level. And it's not a one-time conversation is what I'll say. So I got lucky that I had parents who kept beating certain things into my head over time. Like, at some point it will start to click. And first off, you know your kids. So however they need to receive the message is how you need to deliver it as the teacher. And that's for anybody. But for kids, they also, in addition to getting the lesson, like the lesson has to get reinforced immediately. So when I do a youth workshop, I always cringe because when I leave the workshop, I know that these kids got a great lesson because I did it. And then all I think about is they're going to go home to parents or guardians or whoever who doesn't know something that I explained in that session. So if the parents aren't where they need to be, just be honest with your kids. Hey, look, we got some things to do. We ain't got the money to go to these places. We can't eat out. I can't give you the name brand clothes, but here's what I can do. I can do better by learning more. And you bring your kids along on the journey. If you can be open and honest with your children about where you are, give them some real life examples of people or platforms, whoever they can relate to, you got to pull them in to make your example and then say, what are we going to do to live out what you're seeing on TV?
Right. Right. Absolutely. I'm going to ask you this question and give you time to ponder it because we still have to pay the bills here. And I want us to transition into not only why you have that focus on disrupting the generational poverty, you've led into that, but what does that look like and how can life insurance be used to disrupt generational poverty? Okay. So you guys don't go anywhere. We'll be right back.
Why don't you ever see elephants hiding in trees? Because they're really good at it. Yeah, I get it.
Roll over. When you adopt a shelter pet, you discover all the things that make them unique. And your mother. They're a little bit of a lot of things, but they're all pure love.
All right, if you guys are just tuning in, I have Mr. Jasper Smith here, my guest on the show today, and we're talking about disrupting generational poverty. And we're already into the flow of talking and having a discussion around this. And I just wanted to just share with you during the break, we have a viewer that says, you know, exactly what you were talking about. How children mostly mimic their parents. And you know what? That's so real. That is so real. But the question that I posed to you was in terms of your focus on disrupting generational poverty, you know, not only what does that look like if you're disrupting it, but to talk about how can utilizing life insurance, which a lot of people always say, I ain't gonna leave nothing for her to spend on her boyfriend after I'm gone. I mean, because that's the mindset. But I know that you can enlighten us about all of the different things that life insurance can and should be used for. So I'm gonna yield the floor to you.
Yeah, you know, and let me go ahead and address that old adage of they gonna remarry if I leave them all this money. So just so everybody knows, people only remarry because they ain't got no money. We never think about it from the other side of the coin. People remarry because usually they're young enough. If a spouse dies, they can remarry and be married for what is like the 10 years and they can get somebody else's social security. That's where that came from, Miss Gloria. If you didn't know, I'm telling you and all your viewers and listeners that the reason people remarry is usually for a financial reason. If there was money left over, they would just stay single and just kick it. They wouldn't be in a hurry to re-up and get married. I mean, let me know if I'm being too real, but you don't remarry.
No, that's real. That's real.
So some of them need to be married, and people love relationships. I get that side of the coin, but most people remarry. Think about this. Think about any famous person that you or any of your viewers know. Like, think about wealthy or rich people. They do not remarry right away because they got the money. They have the assets. So this life insurance play is, there are some, I'll say, alternative uses to life insurance that don't involve you dying. We don't have enough time to talk about that today. But the thing people got to understand is that the quickest way to disrupt generational poverty is to get some life insurance. And preferably, if budgeting is your issue, term insurance because it's typically affordable at most financial institutions. Term insurance. And so when people say, well, Jasper, I'm gonna leave my real estate and businesses, and they list off all these other assets, and I say, which one is the cheapest that causes the least amount of headache? A term insurance policy. Tax-free money. If you leave your family real estate, most of them are gonna sell it because they don't understand wealth, or they need the money, so they quick to sell it. Then you got a tax issue.
Ooh,
so I'm trying to get y'all tax-free money.
Right.
But Miss Gloria, these are the people who say they love their family. I'd rob, steal, kill. And I'm like, buy some insurance. And I always add, what else will you do for your family, the ones you say you love? And people are like, well, Jasper, but you sell insurance. I don't care if you don't buy it from me.
Buy it from somebody.
And it's the most efficient way to leave a legacy. I don't care if you got bad credit, you can get life insurance. If you're not the healthiest person, it might cost you a little more, but you can get it. So we're finding all these reasons as to why we can't do certain things. And it comes back to your education piece. You don't know enough about this product, or you've been listening to all these knuckleheads give you bad information. So you have internalized it as the truth. Mm-hmm. And then you just say, no, I don't need it. Oh, I ain't dying. I just, look, it ain't that hard.
And listen, and while you are talking about this, life insurance, we talked about, at one point, I saw so many GoFundMe funeral.
Stop it. Don't do this.
I'm going to go there. I'm going to go there because we talked about it. And the thing is, what life insurance can do for your loved ones when you got to bury them. Not asking people to help you to be able to bury. And a lot of people who are against even being cremated, because the family doesn't have the money to pay for an actual embalming and place in ground. So they think that cremation is the way to go. But look, go on, take a deep breath and look, hit it, the bullseye. Just go for it.
Look, go. I swear to you, it was a couple months ago. The pandemic is why this happened. A lot of people didn't expect to die last year because of COVID-19. And every time somebody died, or I saw the statistics about COVID-related deaths, all I thought about is somebody didn't expect to die today, or yesterday, or right now. Somebody probably died right now somewhere in this world. And all I could think about being a financial guy is, did they have their stuff together? And was life insurance included in that plan for them? Because you don't think about all the decisions that have to be made when somebody dies. You don't think about all the cost. And so I don't think you love your family if you don't have enough life insurance. That's just my thing now. And I didn't say that early in my career, and now I just call it out. I don't think you love them enough, because you will spend money on all these other things that will not take care of your family when you leave this earth. And yet you won't pay a couple of dollars a month for this premium. So you're telling me you don't care about disrupting generational poverty. And so I feel sorry for your kids and your kids' kids, because I got people right now, Ms. Gloria, swear to you, have multiple kids, no life insurance, and are dodging me and the rest of the world like the plague when somebody says, you got insurance? And it's like, just understand, if you're not here, your kids, your wife, your husband, whoever you're married to, they losing that house. Your kids ain't going to college. Just think about all the basic necessities. And there's all these diagrams you'll see about two parents, making money, and then all the things they have to support. If one of those spouses is out of the picture, yes, the whole thing just falls over. It's like a house, right? If you're going to build a house, you don't start on the second floor.
Right.
But that's what people tell me. Oh, I'm not going to do it. What? Yeah. What is your alternative?
And that's the word. What is the alternative? Because when we talk about it, when we think about it, and it's just amazing. See, you don't know what you don't know when you say, I can't afford life insurance. Look, I'm me personally, I'm so sick of seeing the $9.95 playing on the commercial. I know that it's out there and it's available. And you said something that was really key. You don't have to have good credit to get life insurance. You may pay a little bit more for having bad health, but there are things that you can also correct, right? We have a question from another viewer. They want to know, how do you determine how much insurance should you get?
Yep, I'll give you a platform, and this won't be company specific because I got in trouble for like steering people. Like, oh, he's trying to sell. Nope. Lifehappens.org. It's a link. It's how much life insurance do I need? And most big financial institutions have a life insurance calculator. It's actually the first step that I utilize for any conversation around life insurance. If you don't do the calculator, I may not work with you because I need to know, one, and this is the process, how much do you need? First thing, what type of insurance you get is not important. And I know a lot of people run into insurance agents who just say, well, how much can you afford? And then they throw some type of policy on you. Those are salespeople. They're fine. They're not going anywhere. There are a gazillion of those. So
and they're only looking to make a commission, because people who are really in tune to helping you to improve and increase, your financial health, then they are going to look at this, and it's not going to be how much you can afford. I tell you the story of this insurance man that used to come around to my parents' house every week collecting $2.50, and on top of that, he ate more than what my mom and dad were actually getting out of that, but they had something. But knowing that, that's the key. And so you just have to be aware of those people who don't have your best interests at heart. And there are a lot of them that are out there. But again, someone who's been in the industry and who really understands and can make it simple, I think that's really key.
And let me say this too. If you run into let's say they only do insurance and that's their thing, they should still walk you through that process. The process doesn't change no matter who's giving you the message. It should be, how much do you need? If that's not the first question, it's still going to result in a sale, but I needed it to be it needs to look a little different. And most people aren't approached by an agent who asks that question first. It's typically, how much can you afford? And then they go run you some numbers. And if you run into that person, I'm not saying he or she is not good at what they do. That's their process. Mine is, how much do you need? And then number two, we find out what type. So I know we get lost in all these different bells and whistles and different policies, but if you don't know the number, you've already put yourself at a disadvantage, because what I've also seen in my time is you get that policy. Let's say, Ms. Gloria, you sold me the policy 5 years ago, and I was like, I need another $2 million. And I'm going to say, why didn't you just sell me the extra $2 million years ago when I was younger and healthier? And that's how they get you, is that they sell you based on your budget. And then they already know you're going to need more protection later. You're going to have more kids. You're going to have more assets to protect. So it's just kind of like I'm going to get you now. I'll get you later. I'll get you a little bit after. And so you stack this thing up. And it's just hard for me because I'm an insider, but I always felt better when I got you the right number. But if you couldn't afford that, then I get you whatever you can afford. But I always say, what do you need in terms of like amount? And these GoFundMe's, to get back to this point of why I get so animated, is it should not be the default. And it became the default during the pandemic. And what people don't understand is that GoFundMe's are great when you have a business, or you're it has its purpose, but it should not be for final expenses, funerals. And it got to the point during the pandemic where I would see a couple a week. It got to the point where people would say, oh, Jasper, I saw your little rant about GoFundMe's and dying and life insurance. Here go 2 more. And so it was just, I started opening up people's minds to see, why is that the default? Why not just get some protection and then you won't have that GoFundMe? Right. You know how silly y'all look? Because that makes like the whole family look ridiculous. That means nobody in your family had the wherewithal or the frame of mind to say, this ain't right.
Yeah. Or in terms of, and I can speak to this in a case where you have a loved one that passes on and you don't have enough family members that can each come up with $500 a piece. Let's be for real. And so this is another reason. Like I said, I've lived through that. I've been there, done that. I know that. And this is what You Didn't Get the Memo show is all about, because you didn't get the memo if you didn't do these particular things. Now, one of the things I do want to go back to, Jasper, that you were talking about when it comes to, the whole piece of the life insurance piece. there are other things besides you gave a the analogy of having a married couple and one either have something happens to one where they're unable to work or they die. But life insurance also, and there are different types of life insurance, and we're going to have a whole nother discussion, y'all, on Instagram coming up on the 14th where we can really delve into that. But for whole life insurance, where you can build equity in that policy, and be able to have, you got 3 or 4 or 5 kids, why not buy, $500,000, 200,000, whatever that amount is, like you said, when you're talking to somebody like Jasper, for the kid, because see, the thing is, the key is, you don't know what's going to happen to you when you get older. Right. So it's something to think about. But utilizing life insurance is not just for the death benefits, but there are other benefits that you can use it for as well. Look, would that be safe to say?
Yeah, absolutely. But it's like anything else, right? When people have strong opinions about any product, I always ask the question, who's the source? And tell me what they really know about this solution. Because I've heard it around, certain types of investments. And people say, oh, I shouldn't do that. And I'm like, but that thing might actually be the solution you need. But you heard something from somebody who may not have been a credible source, or they could have been a credible source, but they had an agenda. And so what I found is when we're getting financial, I'll say planning information on any particular product, we don't check enough sources. So even when I do a discovery call with a prospective client, I know you're going to shop around to see if I'm full of it. And I always say, look, I don't have time to tarnish my brand by giving you bad advice. That's it. I'm just going to tell you what it is. And then you as an adult have to decide, am I going to be a good fit personality wise? I don't work with everybody. I'm a little out there. Like I'm high energy. I care. I'm going to say some stuff. I'm going to say, look, it ain't going to be what you want to hear. But my job, my thing is telling you what you don't want to hear so you can get the results. If I was your trainer, you think I'm going to be nice to you if you're not losing weight? I'm going to feel like I'm letting you down as a professional. Right. If a year from now that we've been talking and having a dialogue and you haven't shed a few inches, that's on me as a professional. And so when I interact with people, there's somebody watching this right now who doesn't have enough life insurance. And if we hit them up in a year, will they have gotten it done? And a year is way too long for certain things. But I want people to understand that there's no time like the present. But you've got, like, what are you waiting for? Why are we waiting?
Right. Well, here's another question. What type of insurance do you recommend for seniors who are just learning that they need some insurance? And I just want to say at the beginning of the show, we had a disclaimer. And, we're top lining all of this. And at the end of the show, what we will do is you'll be able to follow up with Mr. Jasper, because he's got a lot of things going on. And if you hang in here long enough, we've got free giveaway. Yeah, I'm excited. So those of you who are asking those questions, you will want to be one of the first ones, to log in and latch on to this. So it's not that we don't want to answer the question, but we want to just keep it top line.
Yeah, and I'll be honest, and again, not my first rodeo here. I never give blanket statements because there's not a one size fits all when it comes to financial planning. So I would almost be a fool to just say, buy this. Because at a certain age, there are going to be certain products that they're going to be just too expensive for you, especially from a life insurance standpoint. And so you want to consider, I'll say, the life insurance as an option, but it may be challenging simply because your age. Age and health are the biggest two factors when an insurance company is making a decision around how to price your policy. And you got to think about it from a business standpoint. Your time on this earth is limited. So therefore, the insurance company has to price this accordingly. So don't take it personal. You could be, 70 years old and in perfect health for a 70-year-old. But again, you got to think about this from the insurance company's perspective is it's a calculation. They've got millions upon probably billions of data points on everybody. I don't care what you look like, where you're from, what you eat. They're going to say, we've seen you before in a whole bunch of different shades or a whole bunch of different charts. And so some things maybe a little too expensive from the insurance side, but we also got to look at your other assets because it may make more sense for you to do an alternative solution and not do insurance. But again, every situation is going to be a little different. But again, you have some options. It's just, it will boil down to how much you need. What are you trying to cover? If I am a senior and need to get some protection, just know it's going to be a little pricey after, I'll say after 60, 65, it's going to be a little pricey.
Right. We do have a question from one of the viewers. They wanted to know if does the PMI or MIP included in your mortgage pay off the loan when you die, or only if you default?
Ooh, I am not a real estate expert I'm not even going to try to tackle this one because I know I'll probably butcher it. Not a real estate expert. I know about PMI, just not well enough to answer that question appropriately.
Right. Okay. So we will, but we will get an answer to you. Like I always say, if we don't answer it on the show, we will definitely get to it. But I do want to tack on to one thing and say to everyone, Jasper, I don't know what your thought is in regards to this, but we're talking life insurance. But let me just also, so there's also the alternative, the alternative of burial plans. Now I'm from the South. Right. And so, I think of most people, they all had some kind of burial plan, and those are still alive and well. And where that's very different, I know that life insurance, we can use that to pay. But for some people, look, with a burial plan, I just want to say, the reality of it is they look, you can have 1 foot in, grave 1 foot out. They don't care, but it's something that will allow you to put your loved one away without you having to do the whole GoFundMe thing. So that's the thing. We have another question from a viewer though. It's, what about purchasing life insurance for children? How soon should parents consider insurance for children? That's a great question.
Perfect. I'll give you a personal story. So I'm the youngest of 3, and my parents took out a policy on myself and my older brother, not my older sister. She's a lot older. There's a wider gap. The earlier, the better. And we talked about it briefly earlier around you are locking in your child's future insurability. So I don't know if I'm going to get cancer tomorrow. I don't know if I'm going to get diabetes. I don't know if I'll, become morbidly obese and become uninsurable. Maybe I'm a smoker and smoke cigarettes. So, for the child, it's helpful kind of pre-planning their life of getting them some life insurance at a very early age. So honestly, I think I don't have the chart in front of me, but you can probably get it on a newborn who's super healthy. So for me, my parents, they got a policy on myself when I was 6. And we were talking about alternative uses for life insurance. The policy that my parents took out on me when I was 6, as you can see, I'm still alive. And they utilized some of those funds from the life insurance policy. Ms. Gloria talked about that cash value, the equity. They bought me a new car when I was in college. And so I never had a car payment because it took money from a life insurance contract to pay for my car. So that's a real life story. If you have children, I would encourage people to get insurance on your children. It's not that you want your child to predecease you, so get that off the table. If that happens, that's life. But we have to do more to protect our kids well in advance. And so it's just this one area that we always think about the bank account, the college investment accounts, maybe it's, the real estate piece. And I'm glad we're shining a bright light on life insurance, Ms. Gloria, because it's the one area that if we just knew more, I wouldn't have to talk about it so much. We wouldn't need to spend all this time, but we want to talk about cryptocurrency and real estate and the stock market. I'm like, you can't tell me the basics. Yeah. You haven't built the foundation, and you're working on like the second floor, you're working on the roof. Life insurance is a fundamental piece. Like, it's like understanding credit. Some of y'all still ain't get the memo on that.
Right. I like that. Yeah. Okay. So listen, let me quickly transition and ask you this, just off the top of your head, in your experience, what percentage of people fail to even create a financial plan? And when I say financial plan, I'm talking all across the board.
Probably about 60-70%.
Right.
It may be higher. It may be higher. I don't know if there's an actual study that can really fine tune that number because financial planning is so vast. It would be hard to capture that exact because there's so many moving pieces. But when I speak to people about, like you said, this comprehensive plan, everybody's out here just piecemealing together. I did this at this age. Somebody died, so I did that. Somebody moved, I did that. I had a kid, I did this. I got a house, I did this. I lost my job, I did that. And you find, again, this cycle of generational poverty. That's how you stay in that cycle. You've got to stop and hit the pause button and say, yo, do I understand what I'm doing? I got these accounts, but I don't understand how they fit. Everybody's got accounts. Everybody's bought something, has a bank account, an account of credit. We all got stuff. How does that fit? That's the piece that's missing.
Okay.
It doesn't fit.
So I'm going to do a rapid fire session with you. Just off the top. All right. Why do people fail to create a plan? Just off the top of your head, what do you think?
They're afraid or embarrassed.
Okay. Why do people fail to set financial goals for the future, but will spend $500 on a concert or a pair of shoes?
They're afraid of being financially successful.
All right. Why do people fail to set a budget?
Because they acting a fool.
Okay. The fear. Budget. Right? It took me into, and I look, I'm just going to share the story. At one point, I was like, where is all my money going? Right? And when I sat down and actually made a budget, what I found, number one, I could actually save. And in your book, The Build Wealth Challenge, it breaks it down to how you can actually, I think it's $66 you save, and you're going to have an additional $1,000 at the end of the year, right? So I can relate to that. For having a budget, you get a chance to see, where you are, because having a budget also ties into your credit, which is my next rapid fire question. Okay. Why do people fail to check their credit status?
They're afraid of seeing the number or seeing that jacked up report. And it's usually a fear. This is usually fear. And then I would say embarrassment is a close second, because once you know your credit's jacked up and then you see it's jacked up, you go into a hole. You put your head in the sand and you act as if it doesn't exist. It's you, and you need to embrace it and figure out how you're going to get past it. It's temporary. Key word in all of that we're talking about, things are temporary, but we think they are in stone. And it is, if you want to do better, you can. But if you don't believe it, you will not do it. So just believe you can do better and you will.
Right. So SMART goals. When we talk about SMART, I think probably everybody listening have heard it, but let's just really level set what SMART means.
Specific, measurable. I think it's actionable, or I forget the A. Some action based. I think it's
attainable.
Attainable. Yeah, that's it. Attainable. Realistic and time bound. And the easy example I can give is, let's say you can't save money. Okay, well, be specific about how much you want to save. Let's say it's $1,200. How do we measure it? We're going to check our savings account every month to see if we're doing it. Is it attainable? Of course it is. I got a job and I can set up direct deposit. Okay, great. Is that realistic? Absolutely. $100 is not going to break my piggy bank. Time bound is 1 year. So it's literally $100 a month. And that was a simple analogy for SMART goals. And you can do this with anything, even outside of money.
Right. So, which leads me into talk about what the Build Wealth Challenge is. So now we're getting down. We're getting there.
Good.
so talk about what the Build Wealth Challenge is. I want to share the screen so people can see this.
Yeah. Here's what happened. So over my time in the industry, I used to ask people the same questions before I would meet with them, and I just kept seeing people like they were afraid to respond to the questions. And these are questions that are just for you. And I was like, if you can't answer this for you, I can't help you. And the reason it's a challenge is I'm an athlete. Like I played ball growing up, played ball in college. I'm a runner. Like I'm going running tonight when we finish up this show. Like I'm ready to challenge myself to do something different. And financially, we do not set these types of challenges. We can do a weight challenge. We can do a healthy eating challenge. We can do who can dress the flyest type of challenge. who can have the most poppin' social media challenge. But I'm like, can we do something that's substantial for our pockets? And so this book came out of necessity where I was like, I'm saying the same stuff over. You know what? I'm going to do what everybody else does. I'm going to throw it in the book and then try to make it as easy as possible. Like, this book will probably take you no more than 30, 40, maybe 45 minutes tops because I read slow. So what you do is you ask yourself these questions that they're 8 questions. Answer them honestly and watch your life change. Guaranteed. Just answer them honestly. You may not need all 8, but just ask yourself, if I can be honest about some of these areas with my plan, I'll know exactly where I need to focus. And I intentionally focus on these 8 questions because these are the cornerstones of a robust or comprehensive financial plan that you should have a firm understanding of.
Mm-hmm. Yeah, absolutely. So we're going to take a really, really quick break. Mm-hmm. And when we come back, I want you to tell the viewers about the book, and we're going to talk about your offering. But in particular, what are the 3 or 4 main focus areas in the book? And I hope those who have been tuned in, we sell people online, will, act on this. So you guys don't go anywhere. We're going to be right back.
Before we celebrate the freedom most Americans have, we must fight for the freedom all Americans deserve. Because all lives can't matter until Black lives matter.
Thank you for watching the You Didn't Get the Memo show with your inspirational host, Gloria Bailey Ray. It's your contributions that make this happen. To become a sponsor, send an email to youdidn'tgetthememo@gmail. That's the letter U, didn't get the memo. If you're not in a space to be a sponsor, but you like what you hear, we simply ask that you support what you like by making a contribution to the show. There are 3 ways to make an online donation. Visit paypal.me/Gloria Bailey Ray or Cash App or Venmo, Gloria Bailey Ray. Give what you can. Your support is appreciated.
All right, guys, I want to thank you so much for hanging in here. We've been having this awesome conversation, and I want to say to my viewers, hey, thank you guys. Y'all have been live in the comment section today. I really appreciate it. We've got people, Jasper, like I said, we've had Tampa in the house, we got Atlanta in the house, nice. We've got right. It is it's awesome. Detroit's in the house, so ATL always live. So we've got people who are here during the break. We actually had a comment from a viewer that talks about fear, lack of knowledge, wants versus need, wanting to feel important are some of the reasons that I feel we are unable to position ourselves financially. And I love this because it's bringing out these insights for our viewers to really stop and to think about, oh, wow, what is this about? So before we went to break, I asked you the question to tell the viewers about your book. Mr. Bill Webb.
Yeah, so this whole challenge, I think I asked the questions in a very specific order, and what I would recommend anybody to do, if you are just avoiding this financial planning conversation completely, do one question and then put the book down. Don't even read the other challenge questions because it's going to begin to put you in a space where you feel overwhelmed. And that's why people don't do any type of financial planning. They just get overwhelmed with, it's just too much. Look, we all got a to-do list, but tackle one question at a time and then just put it down. Or ask yourself the question and then do that kind of self-reflection. I ask people to take inventory because a lot of times we want to do all this work and move. I'm like, stop. What do you have right now? So I talk about the balance sheet and how you have to take inventory, because before you go on a vacation, I know you make sure you got clean drawers. So before you go down this journey of financial planning with me, I gotta, what we got? So take that time. And then the last thing I'll say, and this is actually in the back of the book, you don't have to do this by yourself. And I mean, not including like me as a financial expert, but like think about your family and friends. They're in the same boat. You are a direct representation of your 5 closest friends. Take a look in your phone, Take a look at your family function. Just see how everybody else is doing. Is anybody out here killing it? Because if not, the conversation at the cookout, the barbecue, the family reunion, it's got to change. So maybe you do it as a group, and then all y'all can air out your dirty laundry, which everybody already knows. But now y'all can laugh about it because it's funny when you can have that moment where you're like, I did that or I do that. It's so funny, and you're like, oh, I was acting a fool. But you get past it. And then at some point you look back and say, I can't believe we even thought that way. But if you aren't going to do it, who in your family will? I got family members that still don't talk to me. And I've been doing this for 13 years. I'm like, when's a good time for you? Because I'm helping everybody else. Everybody else is benefiting from having some type of a relationship with Mr. Bill, be it, on the surface level, the massive level, and all in between. But I'm like, if it's good enough for all these clients and people that I've served, why do you think it's not good enough for my family? I love y'all. I want to help y'all first.
Right. Come on now. Come on. I love that. No, but let me just say that I asked you about the focus areas in the book. And I'm glad that you made the point that read, because I'm one of those. I read through and I was like, what the heck? I was like, woo-wee. You all up in my Kool-Aid, because some of the things that I felt like I had together, but there were other things that I know for a fact I didn't have together. But what I loved, I came away and I told you, I've read the book 3 times. I'm going to bed with my iPad reading it. Why? Because the thing is to get better. See, when I think about if somebody needed to borrow money from me, how much could I lend them without having to even worry about them paying it back, right? And I say that is because most people will be willing to give you 20, maybe 50, maybe just maybe they may squeeze out 100, but they're looking for it back. My thing is, if I'm going to give you something, you've asked me, I want to be able to give it to you with no expectation of it coming back. If it does, that's fantastic. Right. But usually what I'll say is pay it forward, right? Yeah. Pay it forward, help somebody else. But what you wrote in your book, the Build Wealth Challenge, let me just say, it is off the chain. It is awesome, very, very real. And I don't feel that anybody should be put off by it at all, by no stretch of the imagination.
You can't. But that was the point. I've read so many financial books that are this thick, and they give you all these charts and graphs and anecdotes. I was like, man, get to the point. And when I sat down and did, I said, you know what? I'm gonna stop wasting your time with this nonsense that is irrelevant. Because I don't care what color you are, where you're from. If you pick this book up and just read it.
Right.
If you walk away and say, Jasper, I can't figure out financial planning after reading your book, I will scrap it and tell my publisher, yo, we gotta rewrite it. Because I was like, I gotta make this so simple that you don't feel the intimidation, you don't feel the pressure. It's a little heavy when you're immersed in this world in financial planning, but if you don't do this, it's going to continue to eat you up. And it's going to eat you up till you start going crazy. You're going to start yelling at your family and your friends, and your kids going to be like, why are you so angry? Because your money ain't right.
And when your money is funny, ain't nothing right. That's just the real. Yeah. So let's get into telling people what the giveaway is. Talk about what the giveaway is, Jasper.
So this is my Southern boy coming out. I have done some talks where people have purchased copies of the book or e-versions. So I have a set of links that I want to give away. It's 10 free copies, e-copies of the book. So there's an email address that I utilize for this campaign. It's info@readytobuildwealth.com. In the subject line, just put get money. And here's the play. Because everybody's like, what's the catch? The catch is you got to click the link and redeem it. I have tried to give away this book and people will not click the link. And so first 10 people who send the get money in the subject line to that email address, info@readytobuildwealth.com, I will fire back a link that has your free copy of my book, and I give you 48 hours. So if after 48 hours you have not clicked to redeem your copy, just know it might not work after that 48 hours. Sometimes it does, sometimes it doesn't, but somebody's trash is another person's treasure. And that's how I've had to start doing this free campaign, because I felt as if If I was doing something fun, like, I don't know, tickets to your favorite show, people will redeem the link right away. But when it's like really about changing your life and changing your financial outlook and really disrupting generational poverty, people won't even click a link. It'll take you literally 2 minutes. It'll take you a minute. You can get this email, click the link. That's all I ask. I'm giving away 10. The first 10, you get a copy of the book. Sometimes I'm able to like convince people to like sponsor and buy more links. So if it's more than 10, I'll try my best if I can find some extra links. But all that I ask is you send an email to info@readytobuildwealth.com. In the subject line, you just write "get money," and I'm gonna send you that link.
Yeah, absolutely. Jasper, you know we are like right there, almost out of time. So I'm just gonna say to you, what do you want people who've tuned into the show today to take away?
And here's what I want you to do. In addition to all the financial planning stuff we talked about, work hard until expensive becomes cheap. That's what I'm going to leave the audience with. Work hard until expensive becomes cheap. Now, just know financial planning is included in that. But until we can work hard to get to that level, a lot of us will continue to struggle. And just know you're not alone. Don't ever feel like you're alone. Sometimes I got to give some tough love because that's the only way we're going to move forward. It's not going to be nice. It's not going to be fun until you get over that hump. And if I can help you get over that hump, or if you have a family member, a friend, whoever who is in this space of, I'll say, financial services, stop avoiding him or her. Just stop. Stop avoiding them. That's what you have to do. Embrace us, and then watch your life change. It's not that hard because I'm seeing people do it every single day. Why haven't you made the decision to do something different?
Right. All right. Jasper, I want to say thank you so much for being on the show. Don't go anywhere. I'll be right back with you. I want to say to all of you, just a gentle reminder to support our efforts by inquiring about our sponsorship packages or opportunities, or if you'd like to be a supporter, you know what? I have information. You can send an email to youdidn'tgetthememo@gmail.com. We'll get some information to you. I want you to be sure and follow me on all my social media platforms as well. And every Tuesday, lock in every Tuesday, 5 p.m. Pacific Standard Time for You Didn't Get the Memo show. Again, just remember, our goal is to bring to you, the viewer, information that will help you be informed and for you to make informed decision. Also, heads up, coming up next week, which is July 13th, is Cooking with Chef Matt. We're going to roll it out. You're going to be able to learn some new things, and I am excited. So I want to give a quick shout out to all my new viewers. I want to welcome my new sponsors, the Lemonade Bar, Crispy, Richmond Neighborhood Housing Services, the Chronicle of Blue, Global Investment Company, and also we've got Miss Georgia Richardson and Miss Angela Cleo Smith. So I'm excited to be able to have you guys on the exposure. We're worldwide and I love it. But I want to say to all of you from the bottom of my heart, I thank you so much for your support. Listen, as I always say, if you didn't take anything away from today's show, then it's really you who didn't get the memo. Until this time next week, I want you guys to have a fantastic week. I want you to stay safe, be kind, always pay it forward. And remember this, the quality of your life is determined by the decisions that you make. Again, I want to thank Mr. Jasper Smith for being on the show today. Be sure to check out his website, and don't forget to click or send him an email and click that link when he sends it to it. First come, first serve, first 10 people. All right. So you guys be well, be safe. God bless. I'm out.